This conference will now be recorded.
All right, good afternoon, everybody. This is Greg Morton. It's Sunday, March 2nd, 2025, and this video will be about half the normal weekend email information that I send to the people that attend my meetup group. So this is the weekend update, and of course, this is for educational purposes only, not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we want to learn first and only then invest. So we're going to look at the M factor and the current market review. I'm going to give you some action plan thoughts currently as the difficulty continues, and then sort of a preview of our meeting, which will be this Tuesday if you desire to sign up for that. So the M factor. So as always, the M is the most important letter in Canslim, and per O'Neill, the three important things to look at, and we do it in this order of priority, is the action of leaders. What are the strong Canslim stocks doing? Even if they're stocks we missed, we still get clues on the M from watching them. Second is actions of stocks owned, which is sort of like, wait, what stocks? As most of us have been moved to the sidelines. And then the third one is the market pulse, distribution day count, percent invested on IBD, and price and volume on the indexes, all of which for my personal purposes, I incorporated into the coloring book, which tracks the things I want to help me determine what the current market direction is. So we'll look at the current coloring book also. So let's hop out of here real quick and go over to Market Surge and just look at this list, which I'm calling Rect 2025. And then these are the leaders that have all gotten hammered. So the leaders are giving us not good indications right now that things are strong. So these aren't in any particular order. So A-Lab had a great run, bam, been slammed. Not is down even under the 200-day moving average. ARM, this was another one that led, kind of got hit on that deep seek whack day. Tesla, terrible down to the 200-day. Palantir, former leader, sort of had climactic looking action, that hockey stick look that Lee Tanner talks about. IBIT has been taking it on the chin lately, so that's the Bitcoin play way down here. A stock, Deckers, got slammed after earnings. GEV got slammed again on the deep seek whack day. AppLovin had some short reports. Really doesn't matter why. It's broken. It's wrecked. Verisight, again, slammed all the way down to the 200-day. Kava, this is one I thought was going to be a true market leader, and it still may be in the future, but chart's broken now, slammed down under the 200-day. So that was one I followed closely and was in. Got stopped out back here on mental capital preservation sell rules, so made money, tried it again here, got stopped out. Fortunately, way up here. So that's why we follow our 7% stop loss sell rule. On Cloud, another one I thought was going to be a true market leader. It may be in the future, but currently broken, slammed down to the 200-day. Axon slammed on earnings. This is our software stock ETF. You can see the damage that's been done to it. Dox is one still holding up, but has been hit. Oh, that one shouldn't be on this list. Sorry, none of these should be. I put these in here for another meeting. We were just looking at them. Sorry. So we end with software. That's the one that's been slammed. Forget what I said about Doximity. So the number one thing we look at in looking at the what sort of strength we have in the market is the leaders, and the past group of leaders have gotten hit, which leaves us looking for new leadership. So let's look at the coloring book. So there's several columns in here, many of which I've added over the years. So the first one here with the count, the yellow dot is the 25-day window. I just use that because O'Neill used a 25-day window for distribution days, and I think that's a relevant time period to use. So within that, this column, I grade each day as a selling day, a buying day, or a nothing burger day. And so within our 25-day window, I only have 7 buying days and 13 selling days. So it is a distribution dominant market rather than an accumulation dominant market. And I got that concept from Mark Minervini, and I just added it to the coloring book. So it's a hard penny environment per him. And then these 6 columns, first 6 across the 6 indexes, track the MMTS signal, which is based on the position of the index relative to the 10 and 21-day moving average lines. These have all flipped to red, so that is weak, except for NYSE, which is still yellow and hasn't flipped to red. Distribution day count is high at 8, 7, and 6. So we've got high distribution. The IBD column is at yellow with a recommended investment of 20 to 40%. So that's fallen off drastically. The market school model is at 0% invested and has been since way back here on the 21st. The power trend, which is under pressure, has now turned off. So there's no designation in that column. So that's another sign of weakness. Steve Sweat's window of opportunity signal, which is either green or red, the window of opportunity has closed. And then new highs versus new lows. We have a trend of new lows on both the NASDAQ and the NYSE. So those are all showing a lot of weakness. In the middle factor we consider as stocks we still own, I'm only about 10% invested currently. So been slammed almost to 100% cash, 90% cash. So stops have been hit and the market has not been strong. So let's go back over here. Okay, we looked at all that. So the bottom line, it's been a tough market. They either scare you out or wear you out. The COVID bear was one of those scare you out markets. This current one is sort of one of those wear you out markets, but trying to move to scare you out. And, it's just been an ongoing chop fest, whipsaw situation with the recent plunges we saw. In fact, let's go back to market surge and look at the index charts real quickly. So here's the NASDAQ daily. I drew in these red lines. It almost looks like we're working on a second leg down. We know that if we have a true bear market, normally there's 3 legs down, can be more, but usually there's at least 3. So we've got that. We really can see all this started back on December 18th with the Fed hawkish whack day. And then we've just had this long, choppy, grind you up sideways trend since then. And I've marked here on the dates. We had the deep seek whack was on January 27th. And then we've had tariff talk whacks on the 31st, February 3rd, and February 21st. And this last one really pushed us down, broke the 50-day. The 10 and 21 have crossed over the 50. And we actually came all the way down and touched the 200-day on Friday. This red line is 5% off the top. This red line is 10% off the top, which would be an intermediate correction or a correction that hasn't hit yet, but just seen a lot of weakness. These moving average lines are turned down. One of the signals that Mike Webster looks for is having the low of the day above the 21-day bar, really having it for 3 days. It's being sort of equivalent to a follow-through day. So that one doesn't look good. Let's look at the weekly while we're here. So same thing, had that sideways trend, keeps testing, just above that 20,000 level, and now is coming down. In fact, on the daily, you can see we've gone all the way back and even taken out the post-election lows before that run started. So quite a bit of damage there. S&P 500, sort of the same. You can't really see 2 legs down on this one. Obviously, it's not damaged bad. It hasn't even gone down 5% off the top. So it's a little bit stronger. NYSE's the best, actually even back above the 21-day and has never taken out the 50-day. And that's the one that was still yellow on the MMTS. Dow, again, battling at the 50-day, trying to hold it. We'll see what happens there. And then the real serious damage is in the small cap indexes. So clearly here you can see a second leg down in progress, starting, however we want to phrase it, we don't know, has crashed through the 200-day. Moving average lines are, stacked in the wrong order. They're all turned down. Here's 10% off way up here, so we're below that. Here's bear market territory down here at 1972. And the S&P 600 is identically bad in the small cap. You can just see you've crashed the 200, you got the 10 crossing over the 200. So just a lot of weaknesses there. So just hasn't been pleasant lately to be a growth stock position trader. So current market thoughts, Canslim shoved us to the sidelines fully or almost fully. Time to study. It's time to seek relative strength. This will be a big topic at our Tuesday meeting. How do you do that? What are the current groups showing strength? What are my list of stocks showing strength, holding up? We'll go through those in detail at the meeting. Some experienced investors may be shorting, and it's fine if you're in cash. If you don't have a instrument at your brokerage, that's paying 4% or better, you can use SGov to park cash. It has a monthly dividend. I just buy it on the first of the month and sell it on the last of the month. I never get the dividend, but it's easy to track and it's a place to park cash. So current market picture for me, kind of got a train wreck. Big week coming up this week with Tuesday being the trigger date for the Mexico and Canada tariffs, which previously got kicked down the road for a month, but those kick in. And then on April 2nd, we have EU tariffs and reciprocal tariffs. So that's just creating a lot of uncertainty for the market. And really, the Fed is sort of irrelevant now to me, unless they start talking about price hikes. Everybody's pricing in maybe one rate cut this year, maybe two if you're really lucky, and those are going to be far down the road. So Fed's not a tailwind, hoping they don't become a headwind. So bottom line, we're in study hall. Take advantage of the timeout when the market gives you a timeout. When you're in study hall, study. We are looking for a rally day and follow-through day. In fact, our big educational topic on Tuesday will be working through that system, how it developed, how it works currently. So I'll be covering that in detail for those that come. Remember, you always want to do the weekend routine work, especially when you don't feel like it, like this weekend. Helps a lot on the action of Canslim growth stocks. And then I use the MarketSmith Growth 250 as well as all the lists in the newspaper to do that and do the weekend routine. So our monthly online meeting will be Tuesday. Here's the agenda. I'll do an introduction and welcome. We'll talk about the M factor, similar to what I did today. We'll look at the list of deep 6 stocks that got whacked. We'll look at the group teaching portfolio, 2025 to date, current holdings. That's at about that 10% investing. And by Tuesday, there might not be any left the way things have been going. Look at my current watch list. We'll talk about market surge and some, golden nuggets, trading tips from a variety of sources. I'll do a segment on the current IPO market and discuss one that's looking a little bit interesting now. And then the 2 big educational segments will be on stocks showing relative strength in bad markets, finding and tracking those, which will lead to you having a follow-through day watch list to be ready to go. If we do get a follow-through day, we'll take a 5-minute break at 8 p.m. and then we'll do an educational segment on the rally day follow-through system. So you can sign up at the Stockyard meetup group. I'll put the link under the YouTube video to get to there quickly. The monthly meetings, there's just a $15 tuition charge, and first timers get a copy of last month's recording and slide deck and everything. And then those who attend the current meeting, they go on the list for the weekend emails for the following month. And those just go out to whoever attended the most recent meeting. So I showed you the agenda. Feel free to sign up for that. And again, I'll put the link at the bottom of the YouTube video. You can email me if you have questions. We have prior meetings that are available. There's some on writing your own cell rules, which was actually 3 meetings worth, or a complete weekend routine. You can email me about that. You can follow me on Twitter because I do publish the coloring book almost every day with a quick market diagnosis snippet. And then you can also look at stuff on my YouTube page. So that's it. Hope you guys have a great weekend routine. I'll send the meetup group the email later this evening with links to the GTP and the coloring book and any other videos that we're interested in this week. So have a good one. Hope to see some of you Tuesday. Bye.